Hello and welcome to FX Street Currencies in Play, brought to you by Royal Financial Trading. I'm joined by Marc, the strategist at ADM Investor Services. How are you today, Marc?
I'm very well, thank you.
Plenty going on in the on the fundamental front as far as currencies are concerned, even though they may not be moving that much. What's the highlight for you?
I think the highlight for me at the moment is the gradual shift in tone that we've got from the Federal Reserve in the States. Markets have been sceptical about another rate rise this year, and there seems to be a group who want to resist that. However, we are going to see them start to reduce the size of their balance sheet, and markets are still quite surprised by how hawkish they were, and that's given the dollar an extra boost, which has above all hit the commodity markets, which have started tumbling, not only oil because of concerns about an oil glut, but also the broader metals and some of the agricultural commodities.
What I was going to say, which I've been saying, because I don't think anybody else is saying it, but the whole idea of this normalization of interest rates, which is actually happening, was that it was supposed to be in tandem with the tax cuts and the infrastructure spending. We're not getting that part, so we've got the bad bit, we haven't got the good bit, and that is actually quite ominous, isn't it? I mean, if we never get the tax on the other side, then this is going to be painful.
Certainly, the bump from Mr. Trump for economic growth is definitely not materialising at the moment. It doesn't look like it's going to materialise anytime soon, and that is hugely disappointing because there was a lot, whether it was in the foreign exchange market, whether it was in the equity market, which was built around the assumption that even if he didn't deliver everything that he was promising, that there would certainly be measures which would boost growth. And at the moment, they looked very unlikely to materialise. And that has obviously created quite a marked shift in sentiment. And on the other side of the equation, obviously we were talking gloom and doom at the start of the year. Europe faced so many elections where there were populists involved, and that would derail what most people saw was a fairly weak economic recovery. And instead, the story has been the US growth has been somewhat disappointing, and the Eurozone economy turns out to be the leader of the pack.
Let's have a look at the trending stories today. Yen strengthens for the third day on falling US inflation expectations. Treasury 5-year, 30-year ended session on flattest levels as 95.5 basis point spread was breached, taking it to 9-year lows. And I suppose it ties in with what you were saying. And then gilts under pressure as Haldane's hawkish comments hit the market. Cable holds above 50-day moving average at 126.60. So, I mean, Haldane really is breaking out of the ranks there. I mean, he's the chief economist. I mean, this is quite...
He is the chief economist. The significant part, I think, in that is that keeps the potential voters for a rate hike. Well, it probably implies he's going to vote for a rate hike fairly soon, and then it actually takes two more, because for the time being, while they don't have 9 members of the committee, if it is 4-all, Mr. Carney has a casting vote. So he effectively has 2 votes at the moment. So we shall have to see how this more hawkish talk actually turns out in terms of actual voting patterns on the MPC. It means a slightly choppier time for cable.
That's obviously a vacancy many would like to fill, I'm sure. Let's go on to the live charting. Just thought I'd get us to talk about the Kiwi overnight. The central bank there remaining on record low levels?
Yes, they kept rates at 1.75%. I think the interesting aspect of it was, as much as they're saying they're going to keep rates on hold for a protracted period, the tone on with regards to the Kiwi dollar, which they've been protesting the strength of for forever, or it would seem, was rather more dismissive. They sort of went down the lines of, well, if the Kiwi dollar actually weakened a little bit, it would help to rebalance the economy, but it's no big deal, which is really quite a change of tone from them. And it gives somewhat free rein to people looking for a little bit of carry that you get out of most of the other major currencies into the Kiwi dollar.
Okay, and just obviously can't resist looking at live chart of the pound hourly chart here. A little range after the spike that we had. Well, I suppose, one day we had Carney and his no interest rate hike, and then the next on the Tuesday, and then we had precisely the opposite from Haldane. So, and we're back somewhere in the middle.
Yes, because at the end of the day, Haldane, as I was pointing out earlier, isn't going to carry it is how the other people who tend to line up more behind Mr. Carney, particularly Sir John Cunliffe, and a couple of the others tend to vote with Carney. They won't vote with Mr. Haldane. So as much as we did get a bit of a boost, I still think sterling...
It was a spike to sell into, basically, from
yes,
a trading perspective.
Exactly. I mean, I think it really is just a little bit of short covering, and it remains to be seen whether we can really break out of the range that we've established over the last couple of days.
Okay, let's go on to the trade of the day, we hope, which is the Aussie dollar. Aussie housing bubble risk offered tone to strengthen below 75.40. Sell stop with entry point at 75.35, stop loss at 75.65, and take profit at 74.90. So our friends at Royal Financial Trading giving us a pretty robust and rigorous trade there.
Well, in the sense that commodities are basically coming under a lot of pressure at the moment, and the Aussie dollar has never been, is always very closely aligned, particularly with the fortunes of iron ore and steel. The downside risk on that is really quite substantial.
Right, okay. Let's move along. Here we've got trading positions, euro dollar 50.50, same I suppose with cable. Quite short of dollar yen, which starting to look a bit more right now, but we're a little bit more risk off at the moment in the market, I think.
We are somewhat more risk off, and certainly because of you've got equity markets where there are a lot of commodity-related stocks, be they oil companies or the big miners, which people are heavily involved with, particularly for the dividends and the hope. So it's not really surprising that's the people want to go more long of yen at the time. It is now the safe haven currency of choice.
Okay, 50-50 on the Aussie, which you can obviously compare and contrast with the trade of the day there. Then economic calendar, initial jobless claims, continuing jobless claims, and then the EU, the consumer confidence figure for the Eurozone. Okay, so that's the end of FX Street Currencies in Play. Thank you to Marc, Ostwald, and thank you to Royal Financial Trading as well.